you have an obligation to yourself to not fall victim to the hype. And also bear in mind that we rallied up from our bottom to our top by 64%, and we are now pulling back from our top to our bottom by 20%. This is okay. We went up by 64% and we are pulling back by 20%. Bears are more aroused than Epstein's entourage at the moment, and we're not even in a particularly bad place. We had a beautiful area of support down here. We then deviated below it for, granted, a very long period of time, but this was a very clear deviation because it resulted in an explosive rally to the upside. Yes, we did set a double top. I'm not saying this chart is perfect, and trust me, I will go through the downsides of this chart as well, because you know the deal. You know what you're getting on this YouTube channel. But we now have what I've been saying is the strongest area of support on this chart for now, right here. Not only because we found support over here, resistance over here, and if we zoom out, literal all-time high back in 2017 with more consolidation back in 2020. Not only because of all of that, but because this is just a psychological level and we're falling down to it. We have the 618 Fibonacci retracement down at this level. Guys, I've been bullish on this market since we were down here. Go back to my YouTube videos between November to the beginning of this year, and you will see that I was constantly talking about how it just makes sense that the market rises up. And the bears had a lot of pain on this rally up, but now they are absolutely basking in that glory, being extremely good. And you've heard it from me a million times. I'm going to say it again. I am not here to make friends. I'm not here to agree with anybody. I don't want to agree with people. 90% of traders lose their money. And if I find that I'm putting out ideas and everyone's like, yes, I mean, you're right, and so on and so forth, that's how I know I'm probably wrong. All right. And that's just how it is. It's very hard to dispute that. And so what I'm liking right now is that sentiment is insanely bearish. It is insanely bearish, but we have probably our strongest area of support here. And look, like I said, we're not in a good place in this short-term chart, right? I mean, we've lost this low. We could recover back up. I mean, we've got, it's Friday now in my time zone in Dubai, but I mean, until the end of this week, 3 more days, whatever. I mean, something might happen, right, where the market recovers back up. Entirely possible. I don't know if it's super probable yet. Obviously this could just turn out to be one big heinous deviation, but I mean, anything can happen by that measure. Obviously, statistically, it doesn't look amazing from this perspective, and there's a lot more that's bad with this chart, right? If we look at the daily Ichimoku cloud, for example, take a look at this. Let's wait for it to load up. We have either fell out of it or are nearly at the bottom of it. Yeah, we're nearly at the bottom of it. We don't have a whole lot more that we can fall until we lose this critical area of support, and we don't have any more support on any of the key indicators that I'm looking at, right? It's only horizontal price levels and just almost basic common sense, because one of the things I want to show you in this video is what's happened historically and why I think that we're still in a strong position. I'm not saying that it's definite, but I am saying that I'm going to be putting my own money behind these ideas, and you already know the deal. VIPs will be getting the scoop on exactly what's going on, and I will be executing all of my trades only on Bybit, where you can get 30k heading down to the description below. 30k bonus. That's just money you can throw right back into the market. Literally any money you make with that, you can withdraw those profits. If you lose money, doesn't matter, it wasn't yours to begin with. OKX up to 20k in rewards, stack that shit, you got 50k, and Prime XBT, stack that, you got 57. Absolutely killer offers. I will only be executing my trades on these platforms. And there you go if you are interested in that stuff. Now, here's the thing. If we look at some of the price action that Bitcoin has had before, and I know what you're going to say if you're attentive, this isn't a bull market. What we are in right now is a bear market. You are correct. But if we look at some of the rallies that Bitcoin had in its past, and we look at some of the pullbacks it had, this is really going to put things into perspective here. So let's look at this rally right here. Bitcoin up by 85%. Right now we're up by 65%, right, from our bottom to our high. It's not super close, but it's definitely not super far away. How deep was the pullback? Minus 35%. Minus 35%. We rallied up by 85%. We dropped down by minus 35%. Okay, and if we look at a Fibonacci retracement of this very same price action, we went down. So what a Fibonacci retracement does, by the way, for those of you who don't know, is it literally like, just imagine we have a ruler stretched up here, and then we're just counting what percent of this length did the market retrace by. So in this case, the market retraced by, I don't know, minus 73% of the height of this rally. Okay, and this just puts it into perspective that we retraced most of the rally. Like if we fell down here, 100% of the trend would have been retraced. If we fell down here, 23.6% of the trend would have been retraced, like what we printed right here in relative terms, of course. So we cut pretty damn deep. And this is a recurring theme. Like, Bitcoin has pullbacks. Fuck me. It just happens. You know what I mean? Like, I don't know why this is mind-blowing for people, or why this is very hard to accept. This was a huge rally, plus 240%, and we're still getting these deep corrections. Right here, minus 40%. Right here, minus 40%. Minus 40% might not sound like a lot. Minus 35 might not sound like a lot, but you are losing nearly half of your money on these drops. All right, if you've got $100 in the market, you're down to 60 flat. You're down to 60. All right, so these are big losses. Even this kind of pullback right here, we're still dropping down by 30. Bitcoin has pullbacks. All right, I mean, this isn't rocket science or anything like that. Like, Bitcoin does form pullbacks. We take a look at this right here. This was obviously a much slower one. Bitcoin began its uptrend right here at the very end of December. Right here, I'm never going to stop bragging about it. I made one of the biggest long positions of my life. This resulted in a 360% profit. I won't even forget the number. It was incredibly impressive. VIPs saw me entering that trade. I literally entered the trade the day before this God candle, which was very, very impressive indeed. And with this drop down from this high to this low, we dropped down by 20%. We rally up by 36%. We retraced most of that rally. If we throw a fib on this, take a look at this. Look, we retraced by 78.6% of the relative height of this rally was retraced down. You know what I mean? Like, these are deep corrections, but Bitcoin can still go up. Now, obviously, when we're in a bear market and we drop, it's a little bit different. This was quite a different kind of bear market, but this is, a more typical example of what we see where, we kind of, we drop from here down by 20%, and then the dip just keeps on dipping, and there's been some really funny, posts on Twitter of the Wall Street cheat sheet showing you, how the market kind of drops, but then it just keeps dropping and dropping and dropping and dropping and dropping, and it doesn't end, right? And obviously that's kind of what we start to see in some of Bitcoin's bear markets. It does obviously sometimes get very, very depressing, much like what we had right here, and the idea is that it's just going to basically, it's actually a funny chart, to be honest. I'd love to show it to you, but it's going to take me too long to find. But take a look at this right here. If we take the bars pattern tool, it's really fun. I'm just going to show you this for the because fuck it, this is just funny. If we take a look at what people are talking about, it's just like, we do this forever and ever and ever. And we're just having a little bit of fun, but this is what bears think is going to happen right now. You know what I mean? And again, I'm not seeing any key reason for it. I'm obviously not paying attention to news. I'm proudly saying that because news doesn't matter in these markets. And I haven't said this for a while, so I'll say it again now. But if you're reading a particular bit of information with the news in the market, you're already late because somebody read it first. Somebody edited it, somebody posted it, somebody had the insider information. You're like the fucking last person to be consuming the news, and you're part of the 90% that are going to lose money anyway. That's why you almost never see me covering news on this YouTube channel. I'll sometimes take a look at it like I did in the previous video, and I'll sometimes give my thoughts on it because, whatever, it can be kind of entertaining, but it's mostly harmful because the chart tells you the full story anyway, and it tells you that full story at the beginning. So yeah, right here we're still at very, very strong levels. We could dip a little bit lower, and we'd still be fine. We'd still be fine. We did actually dip a fair bit lower today. We're actually like that current candle is like all the way down here. And it's not even the most concerning thing in the world to me because we have had such a strong uptrend. And one of the other things that's extremely important to keep in mind is that when we have strong uptrends, we need to have pullbacks, right? I think that this is something that people also kind of get lost on a little bit. If we zoom out on this chart, go back to what happened historically, when we have really ridiculously strong rallies like this, we do get big corrections. This was minus 54%. The difference between a minus 40% drop and a minus 54% drop is enormous. Okay, if we measure a minus 40% drop, that takes us from $64,000, $65,000 down to $38,000. The difference is huge with these last 14%. It's like nearly the same move. We look at this on the linear chart, like, okay, it doesn't actually look that bad. It's more, it shows much more on the logarithmic chart. But in any case, it's a huge move, right? Like, to recover that last 14%, you need to pump up by 35%. Like, when you put these numbers in, like, you lose 50%, you got to double your money. You lose 25%. I don't know what the math is on that. I don't know. Someone tell me in the comments. But you know, like if whatever you lose, you got to make back way more, you know, to break it. So these are big pullbacks. But you know, on the other hand, when we have more sensible uptrends, you know, where we're just kind of moving slowly, like take a look at this, right? This is a great example of what I'm describing right here. It's like, okay, at the beginning, yes, it's pretty strong, but then look, we have a huge area of consolidation. And then the market goes up, and yes, okay, we pull back down again, but then it's liftoff, you know, and Bitcoin hasn't been back down here since then. You know, we haven't been down at $8,000, $9,000. Why did that happen? Well, you know, a big reason is going to be because we had corrections and pullbacks. You know, and when we don't form these corrections, when we don't form these pullbacks, and it's just a straight fucking staircase to heaven, yeah, you better believe that you're going to start seeing pullbacks. Okay, so if we see stuff like this now, you know, to me, this isn't, it just can't be the end of the world. It just can't. That's why I'm not scared of this price action right now. You know, like even if we were going to dump below 20K and I just turn out to be horribly publicly wrong, which is totally fine. It wouldn't be the first time. Certainly won't be the last time. Even if that is what ends up happening, I'll just trade the downside, legends. I'm still going to be making money on the way down. You know, it's not like I'm just going to close my eyes and just say, all right, well, I'm going to stop making money in these markets. No, I'm still here to make money. I'm still here to rip these gains, whether it means I go long or short. But the facts that I'm seeing in these markets are right now are that, again, you know, our inflation data is looking pretty damn saucy right now, legends. We are in a pretty nice place as far as inflation data goes. We're still coming down. You know, people did not like the fact that I was saying inflation is coming down. Again, I did make it clear that the way you know, inflation is being reported in at least the US, if not potentially the rest of the world, is horribly misleading compared to how inflation data was reported, you know, back in the previous century. You know, it's just different. We're not reporting it in the same way. It's very misleading. Definitions have been changed. So I agree, you know, like this data has been compromised to an extent. But if you're willing to at least assign some level of importance to this, inflation is coming down. Okay, and that's, you know, yes, everyone's like, you know, what about interest rates? Good points. You know, these things could still be a problem, but inflation in and of itself is coming down. Another big things, by the way, that I want to highlight to you guys is I just saw another thing. It's just, this is important information. Like, there's one thing that you see in the news that, you know, God forbid you're still paying attention to that shit all the time. There's like one thing you see in the news of like interest rates are going super high. It's all very bad. It's very, very scary, whatever. There's another thing to face reality where a lot of people have fixed mortgages. It's horribly off topic, but I need to bring this up. A lot of people have fixed mortgages, right? Fixed interest rates. So at least for like, you know, 5-10 years, whatever. So while interest rates right now are very, very high, that still doesn't affect a lot of people whose interest rates are fixed and probably will be fixed until interest rates come back down again. You know, for a lot of people, that's gonna, like, a lot of people who are buying houses in the last few years, they're still locked in with their interest rates. But CNBC ain't gonna tell you that. You know, your favorite YouTuber isn't going to tell you that. These things don't get discussed. But if you look at the actual interest rates that people are paying, there's data on this. I don't have it on hand. I should have brought it. That's my mistake. I will do it next time. But if you look at the actual data that we've got, some of it, depending on if you trust the sources, but it kind of just makes sense too, shows us that interest rates that people are paying on their mortgages haven't actually gone above, you know, 4%, for example. You know, and you know, when you consider that, yeah, rates are fixed, like, it's kind of fucking obvious too, you know. So I think that these are important things to keep in mind, while the bears are absolutely just, I mean, fuck the lotion. They've got the massage oil, they've got the coconut oil, I don't know, they've got everything they can find, you know what I mean? Like, they are absolutely going for it right now, and they are excited, you know, again, at a time where, you know, we've had an impressively strong, you know, rally. We're now pulling back again. Like I said, it's not a perfect chart, but we're in a, you know, I mean, we're only falling down to a really good area of support. You know, with a market that is, you know, characterized by deviations, and, you know, again, so I've been covering this stuff a lot, and my opinion here hasn't changed. I'm not scared. I'm not worried. You know, I am disappointed that Bitcoin didn't find support here. I'm disappointed that Bitcoin didn't find support here. I'm more disappointed that Bitcoin didn't find support here. They are not good signs. All right, I'm not going to beat around the bush. I don't like the fact that these are strong drops. I don't like the fact that on the daily chart, we've had 3 days of selling off, each day consecutively getting stronger. By the way, Fear and Greed Index has literally just updated, or should have updated, 34. Okay, there we go. So we are in a good place now. Look at that drop. Look at that drop. That is beautiful. The market is reeling its excitement back in. Does it mean we're going to pump tomorrow? No, not necessarily. But we're entering a good place as far as sentiment. Like, people are very, very bad. Like 34 right now. What were we at over here? Let's see. 8th of November. I don't know. I'm just curious. 8th of November was right here. Oh, we're at very similar levels. 8th of November, we were at 31. Very, very interesting. So we're at the same levels that we were at previously. Very, very interesting. I'm curious what we were at over here. 14th of January, same price level. Let's say 13th. 13th makes more sense to look at. 13th of January, very, very high compared to where we are right now. Yeah, 31 to 46. So we were, to be honest, similar range. Yeah, surprisingly. I don't know if there's a conclusion we can draw off this, but it's definitely interesting. It's definitely interesting, that we're at similar levels in terms of sentiment. Again, slightly different circumstances. This was a bear market. We're now in a kind of short-term uptrend, a very, very strong one. This is definitely different. This rally here, definitely different to rallies like this. Definitely different to rallies like this, because this happened when we fell below 20k. This happened, with a very, very strong explosive rally. I mean, the best rally that we had previously was this, which, to be fair, was pretty strong, up by 48%, but this was 64. So again, a little bit higher. It's basically, half of what we had previously on top. Nearly. It's not actually. That was bad math on my part. So it's still, it's a stronger rally. It's come off an important level. It just doesn't look too bad. Let's take a look at the S&P 500, how that closed, because I did cover that with you in my previous video. We are seeing a bigger pullback right here. Again, not the most concerning thing. The S&P 500 has just had a very impressive rally right here. It broke out. It's now pulling back again. Yes, of course, I want to see a pullback stopping here. I want to see this leg going a little bit higher, so that, let's say, this is our area of resistance flipped into support, and then I want to see that the market, kind of gets up here, and then, this is what you hope for, but of course it doesn't always go to plan. We are still only falling into a support area, only falling down to a support line. The dollar is only basically at resistance, or actually getting rejected right now. So it is a little bit, like Bitcoin's obviously moving, a little bit more explosive. It doesn't really make sense to me why the S&P 500 is pulling back today. Obviously, there just must have been a lot of, news hitting the market that was particularly concerning. Again, I don't keep up with the news, but I am just genuinely curious today. Yeah, jobs data says it may be good news though, so I don't know what that's about. No real reasons here. Powell testifies, so this is going to be about interest rates probably. So, it's just fear. It's only like psychological fear, going awry in the market. Like, there's nothing, I'm not trying to say that we're gonna, like I said, start pumping tomorrow, but I'm definitely saying that this is, for me, in my perspective, it's being blown out of, blown out of proportion here, and that's okay. That's completely fine. We know that Bitcoin's very volatile. This is what we want as traders. This is what we want, is this level of volatility. So I'm not worried, and I don't really care, to be honest, if you guys are worried or not, but I wanted to tell you my perspective. It's not my job to try and convince you one way or the other. I'm just stepping behind the microphone and telling you what I think and what I'm seeing, and pointing out observations about how other people are behaving. Because at the end of the day, our job as traders is just analyzing the psychology of other traders in the market. This isn't a math thing. This isn't an arithmetic thing, which is the same thing. This isn't patterns. This isn't any of that. It's just psychology. At the end of the day, behind every green and red button is somebody making a decision using their brain, and that psychology, can be gamed, and that's what we do as traders. So I like what I'm seeing. I'm not worried. I don't like what I'm seeing, but I'm okay with what I'm seeing. I'm not worried. And I'm going to keep my eyes on this. And I'm going to keep you guys updated as well. Like I said, anything I trade will only happen on Bybit, OKX, or Prime XBT. And Prime XBT, $57,000 in bonuses is no joke. Check out the links in the description. It's easy, it's fast, it's well worth checking out. And if you want to be able to see how I'm navigating these markets and all that good stuff, then follow these steps on screen. I will mention I was in a trade. I was in a long trade. I got stopped out. It was a small loss. It happens. I am still going to be putting money behind this direction. It's okay with me. Losses happen. It's normal. So I'll keep you guys updated on that inside of VIP. Really hope you have enjoyed this one, and I'm out. Cheers.